that's a critical component to that. And you do have these more conventional, publicly transparent types of hidden asset. They're not really that hidden. The Vodafone Verizon is a good example where you had Vodafone owned a stake in Verizon Wireless, a very valuable US wireless telephony asset. And the argument was always that it wasn't getting appropriate credit by the market sitting inside of Vodafone, and they needed to unlock that. And many investors have waited around for years and years trying to unlock that value. And lightning can strike, but you don't know when that lightning will strike, and you can wait a long time. So not only do you have to analyze what is the value, but what is the probability that value will be unlocked. Another good example recently is the Porsche-Volkswagen situation, where Porsche owned a large controlling stake in Volkswagen, but there were also hidden liabilities in the form of lawsuits against the Porsche piece. And what's the probability that it gets unlocked? Even though it was obvious what Volkswagen is to anyone doing the calculation, it was not getting credit inside of Porsche due to other factors. In this case, it was a lawsuit sitting inside of the Porsche holding company. So you need to be willing to gravitate to these situations that are complex and may even have some problems or unresolved issues or uncertainties in order to find these great values. You typically see there'll be a conglomerate discount or a complexity discount that's given to these types of companies. It can be 20%, it can be 30%. But understanding the value that's there, having enough of a margin of safety, and having some sense as to what catalyst unlocks it, I think are key.